Hey everyone, Couch Investor back on our earnings video for today, and with that small delay of Meta's earnings report release, but in my opinion, it was worth the wait. The numbers, incredible, huge beat across the board, and again, this shows that, well, the ship has definitely turned around. I mean, the turnaround was pretty remarkable. Of course, they themselves were to blame for the position that they were in. Of course, there is still this Apple aspect of things, advertising the privacy switch, so to call, but their excess of spending, over hiring, stuff like that was all in their control. Of course, they've taken control back, and it's been a couple of quarters. The ship has definitely turned around. The company is much leaner and is growing now extremely fast and in an extremely profitable way. So let's start with a very, very short comment by Mark Zuckerberg. We had a good quarter for our community and business. Pretty short and sweet. And then, of course, talks a little bit about the announcements here. So I'm proud of the work our teams have done to advance AI and mixed reality with the launch of Quest 3, Ray-Ban Meta smart glasses, and our AI studio. Now, if you needed a small reminder of what the expectations are for this year when it comes to growth for sales, fiscal year 2023, 13.63% growth, fiscal year 2024, 12.5%, and fiscal year 2025, 11.6%. But as always, EPS here is where it's at. Fiscal year 2023, 57% growth year over year. Of course, that's because, well, 2022 was just a horrible year, but we continue with the above average, let's say, growth. So fiscal year 2024, 23.8%, and then in 2025, 17.88% growth. So pretty good. Now, of course, you might see here forward PE of 18.6 times. With the numbers that we've just gotten, probably the number will be a bit less, depending, of course, on how much the stock will jump. Now, if you needed a little visual representation of what has been happening with Meta in the last year and a half or so, of course, we peaked back in 2022, and then, well, revenue went down a little bit, but free cash flow just crashed completely, return on equity crashed completely as well, gross profit margin came down, so did return on capital. But it has been a couple of quarters, and, well, free cash flow has continued to increase, and this quarter, yet again, they have increased that free cash flow. I think it's around $13 billion or so. So pretty remarkable turnaround. So now let's jump here and look at the numbers. So advertising for this quarter, $33.64 billion. Family of apps revenue, $33.9 billion. Reality Labs revenue keeps going down. It's just 210 million. So total revenue reached $34.14 billion, which means they beat the revenue estimate by 1.9% and they beat their own guide by 2.7%. Now, if we look at the operating income, continues to increase when you look at family of apps. So that reached $17.49 billion. Reality Labs operating loss keeps being extremely bad, $3.7 billion. So total income from operations, $13.74 billion, huge jump quarter over quarter. And now we're back at, elite operating margins, 40%. What's also pretty important is this. Expenses as a percentage of revenue keeps going down. That's always great to see. Previously, when we looked at R&D, so that's this color right here, we were closer to the 21-22%, but then, overspending. But it's nice to see that this number is trending down while the business keeps improving. Sometimes this goes down, but the business doesn't really move that much. In Meta's case, the business is now generating a ton of cash. Now, before we continue, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. We're trying to reach 30,000 subscribers, so thank you very much for all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. All right, continuing here, net income, $11.58 billion, increase year over year, big increase quarter over quarter as well. As for diluted earnings per share, $4.39, again, pretty remarkable how they have turned it around in a pretty fast time. And now let's have a look at how many people actually still use their apps. So family daily active people in billions, 3.14 billion. Family monthly active people, close to 4 billion. I mean, this means that close to 50% of the planet use at least one of the apps once a month. Half the planet. I mean, how many people? I mean, half the planet. It's actually, if you put it in other numbers, it's actually more than 50% of people that are having access to the internet or can interact with an internet, with a tech device. Because babies won't be using Facebook or any other apps. And probably the elderly, well, the super old people are not using it as well. So maybe it's definitely more than 50% of people that can use social media or an electric device or a messaging app is using an app that is created by Meta. That's pretty significant. Then family average revenue per person, that's now up quarter over quarter, year over year, $8.71. As for the daily active users, when it comes to Facebook, we have increased yet again quarter over quarter, and in actually all regions, US and Canada is up. Europe has been flat actually for the last 3 quarters. And then the breakdown of ARPU with regards to Facebook. So worldwide, it's at $11.23. US and Canada, of course, as always, we know this is the most lucrative market for them, $56.11, up quarter over quarter. Europe, $19.04, also up quarter over quarter. Asia Pacific, $5.12. And rest of the world, a big jump here actually, $4.22. And here it is, probably the best number to look at right now. Free cash flow, $13.63 billion. I mean, look at that jump quarter over quarter. It's really amazing what you can do when you focus your business on performances. You don't overspend. You want to be as lean as possible. I mean, of course, there are some AI benefits to this as well. They needed to invest in that, but I mean, look at that increase. Q3 2022, we're at 173 million. We're now at $13.63 billion in free cash flow. They also repurchased $3.7 billion of their own Class A common stock. As of September 30, 2023, they had $37.22 billion available and authorized for repurchases. They also say here that the ad impressions delivered across the family of apps increased by 31% year over year, and the average price per ad decreased by 6% year over year, which is much less than what they reported last quarter. Then with regards to outlook, so they expect fourth quarter 2023 total revenue to be in the range of $36.5 to $40 billion. They also anticipate that their full year 2023 total expenses will be in the range of $87 to $89 billion, which is lower from their prior range of $88 to $91 billion. This outlook includes approximately $3.5 billion in restructuring costs related to facilities, consolidation charges, and severances and other personnel costs. They also expect Reality Labs' operating losses to increase year over year in 2023. Not surprised, especially not with the launch of Quest 3. But let's see if in Q4 we can see the revenue of that segment actually increase because of the holiday sales and the launch of the Quest 3 and the Ray-Ban glasses. Then they shared preliminary outlook for 2024 expenses, capital expenditures, and their tax rate. They expect full year 2024 total expenses to be in the range of $94 to $99 billion. We continue to expect a few factors to be drivers of total expense growth in 2024. So first up, higher infrastructure related costs next year. Second, anticipate growth in payroll expense as we work down our current hiring underrun and add incremental talent to support priority areas in 2024. And finally, Reality Labs. We expect operating losses to increase meaningfully year over year due to our ongoing product development efforts in augmented reality, virtual reality, and our investment to further scale our ecosystem. Okay, I mean, this year will be $87 to $89 billion. Next year, they are increasing that by, well, definitely $5 to $6 billion. But that said, it is still 5% or so less than the estimates. So I guess the market will not overreact on that number. And so if we look at the graph, we got, of course, a rejection at around $320, $324 or so twice back in July. And then on that October 9th day, since then, 2 weeks in a row of red candles. Of course, tomorrow probably we will see a reversal. Maybe this candle will turn green. So we'll be back above that 50-day moving average. Overall, we are not overbought. Yes, we are high on the RSI, but that's about it. So to conclude, Meta is definitely back, and back probably much stronger than before. This cannot be done without great management, without great leadership, and of course without a great team of employees. I mean, the business itself, whether you like it or hate it, doesn't really matter. They are now back at printing billions and billions of dollars. I'm a happy shareholder. I'm happy with these returns. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I'll see you all in the next one. Bye bye.